Hi, everyone. This is Jason Barrick of Wall Street from Main Street. Welcome back for another Wall Street from Main Street podcast interview. Instead of doing a normal interview tonight, we're going to do our mid-year review. Now, I know this is a little bit past the mid-year point, past the end of June. So, my good friend Aaron Basil of Carnivore Trades, who I've known for over a decade now, he's a rising star in the swing trading community there. He's had a lot of successes on a lot of good calls over the last couple of years. A lot of people didn't know who he was initially. I thought his work was very, very undervalued. So I started, gave him the opportunity to create This Week in Charts. He's had a lot of success with that, a lot of good calls over the years. So Aaron, thank you for joining me on tonight's show.
Anytime, Jason. And again, can't thank you enough for helping me get out there because it's definitely been a ride here. And yeah, Carnivore Trades has been coming up on 4 years in August. So it's been a blessing.
And we're recording this interview or discussion, a mid-year review for 2025 on Thursday, July 24th, 2025. The S&P 500's rallied over 6,000, almost at 6,300. The 30-year US Treasury holds just under 5. I mean, it's gotten a lot higher than President Trump and Scott Bessent, the US Treasury Secretary, wanted. And the gold price has rallied as well, along with the Bitcoin price. Now, before we start getting maybe into specific commodities or which sectors or industries you think will do well over the next 6 to 12 months, I want to get like your view on a 30,000 foot view on like the interest rates, the bond market, the stock market, because early once Trump took over the went into the White House with the inauguration, he was talking about he didn't care about the stock market and he was going to make all these changes with Doge. It really seems like things have done a 180 now because he's talking about how he wants a strong dollar, but the dollar's gotten off to a really weak start. And do you think that that's been like a tailwind for the U.S. stocks?
Yeah, the dollar index is down. I think it was its worst start to the year, worst first half of the year since I want to say that was like 71 or something crazy like that. Maybe just Bretton Woods or 74 or something like that. I will say with the dollar right now, from what I can see in the data, there is a lot of shorts in it, and that could, if you can get a macro trigger of like even just a surprise jobs number or something like that, you could see maybe a squeeze here, but. That has, as obviously has been, there's been a flight out of dollars, and it has helped out the S&P. As of today, we're looking at cash S&P 6363 spot 35 close, up from basically 4,800 in early April. That's a gain of, ready for this, 32.5% in 3 months. Pretty man, not the Nasdaq. That's the S&P, right? Not even the fast moving index. And I think Nasdaq's up like 40%. And yeah, definitely we're seeing assets go down, or we're seeing purchasing power go down very quickly. And it's almost like emerging market like as we're just seeing this melt up here. And we actually had, and I talked about this and warned about this in the show in This Week in Charts. They're gonna ease that SLR. They're effectively doing QE. So starting quarter 3, this is this melt up here shouldn't really be a surprise.
Do you think it's foreign pension fund money, institutional investors, the capital flight that's coming in here because they see that a lot of other countries, their economies are even worse than the U.S. Their monetary policy, inflation, interest rates, all those things are worse than the U.S. And we're having capital flight come in. What would you explain then is the reason for the rally in U.S. stocks compared to maybe some of these other countries?
I think there's always going to be some of that. There is high net worth individuals who are kind of avoiding that because of the decline in the dollar. We have to remember that when you convert, forex, just because the asset that you're buying goes up, doesn't necessarily mean you make money if you have to convert that money back with into a weaker currency, into a stronger currency. So that has been a bit of a challenge for some clients in abroad markets. But you do have, I mean, to me, really, they're goosing the tape. That's how I would put it. I mean, you have the Treasury doing everything they can, and it's almost like they're merging the Fed and the Treasury. I think that's something that they want to do, but they've been goosing it with the short end issuance, and they've been goosing it, now with the SLR loosening, and Uncle Sam like can't afford the market to go down. You look at a chart of tax receipts, then look at a chart of the S&P 500. It's the same chart. So this is something that's going to continue, and we'll have corrections. Though we'll have volatility events, but it's just it's something that's going to continue, and we're in an environment where inflation is the dominant. It's fiscal dominance. We have an inflationary regime, and we're going to be in that for a while.
It really seems like a 180 from the Trump administration from policy compared to when they came into the White House after the inauguration, because he was saying he didn't care about the stock market. He was talking about a strong dollar. He was talking about trying to avoid a recession. I mean, a lot of the policies, Aaron, and the stuff they're saying in public, it's kind of the opposite of what's actually happening. So they're talking about how there's no inflation because of the oil prices and the Saudis. Maybe it's a favor, the Saudis and OPEC, maybe it's a favor to President Trump, have actually increased the amount of oil production, even though I'm not exactly sure why, but they have anyway. And there's still a lot of evidence, though, that there is a good amount of inflation in the real economy. We're seeing this with Chipotle earnings, which were very, very disappointing. They basically said the consumer was tapped out today. When we're recording this interview, they reported earnings, I think, shortly after the bell. So they were down, I think, 15, almost 20%, the shares, because they said the consumer basically is not going out to eat. That's how bad. And then we're seeing a lot of data points in the real economy. The big tech companies, they're doing mass firings. They're talking about automating and switching to artificial intelligence software. And then, like, a lot of these college graduates from top universities, Aaron, I think it's almost 60% of these new recent college graduates the last 12 to 18 months, they're not getting jobs. So I think that's the large companies, they're automating, they're just not hiring a lot of humans right now. Would that indicate that the real economy is starting to go into a recession, even if the government numbers don't say a recession?
Yeah, and again, that's something that I've been kind of talking about for a while. Is that a lot of people were predicting recession, and I think we probably, if in real terms, yeah, we're certainly in economic hard times. But what the one caveat that I said is it probably won't look like an official recession because the government's always going to use growth and GDP to say, oh, look how hot the economy is, right? But GDP, what is
And
GDP?
look at the S&P 500, Aaron. There can't be a
Right,
recession if the S&P
right.
500 is rallying and almost at an all-time high. There can't be a recession.
Well, it's funny because Trump wants rate cuts, but yet you've got the market goosed up to all-time highs. You've got, the retail sales recently, they're better than expected. But again, this is to that point, though, is that it's what is GDP? It's just a measure of the amount of transactions within the economy at that value, or the nominal value. So it doesn't actually GDP can go up all at once, but that doesn't mean the economy is healthy, right?
Yeah. Well, the
Right?
consumer sales, devalued currency drives
Right.
higher asset
Exactly.
prices, right?
Exactly.
So
Yeah.
so if the dollar is devalued, what, 10 or 11%, it's off to its worst start, you said, since the early 70s. I mean, the asset prices are going to adjust to a devalued currency like in Zimbabwe or Venezuela or Argentina.
Of course, and again, the companies that are big and they have moats of cash that are positioned well, like Mag 7 stocks, and they're on the inside track, and they're all stuffed up Washington's butt with all the politicians. They're going to have an advantage, and all the other companies that are doing things the normal way, they're not going to be able to do that. So they're just going to fall farther and farther behind, and you're just going to have more consolidation of power at the top.
Well, you're going to have mergers and acquisitions. So the companies that have lower cost of capital, that have the free cash flow, that are not getting hit by what the consumer cutting back, those companies are going to have an advantage compared to the companies that have good assets, but the consumer is cutting back on them, or they can't refinance their debt or things like, or raise capital.
Right, and some of a lot of these companies are buyout targets. I mean, Microsoft will buy anybody. I mean, and they're the ones that have the cash to do it. So did
Well,
you hear?
they're not buying Microsoft isn't buying companies. Well, Meta. Actually, I was thinking Meta. My bad. I was thinking Meta. Meta's not buying companies. Meta's buying individuals. They're paying like hundreds,
Yeah,
$100 million per
yeah.
artificial
They're
intelligence expert.
did you hear Jeff Bezos? I don't know if this is a rumor, but I heard Jeff Bezos was trying to buy CNBC.
Oh boy.
That's
I
not a
mean, he was
fun.
trying to
That's gonna
buy
be
the
fun.
Redskins. He was trying to buy the Redskins a year ago, a year or two, a couple years ago
Yeah.
too. And it's just one of those that there's they made a movie making fun of the tech billionaire guys. It was called Mountain. It was a combination of Atlas Shrugged. No. I can't remember it. It
I,
was on HBO.
I know
Mountainhead
it.
instead of Fountainhead.
Yeah.
It's called Mountainhead. So they had like a mix of characters there of like Zuckerberg and Elon Musk and Bezos and a few other the tech billionaires who met out like this compound up in the Rocky Mountains.
Tim Cook.
Well, actually, you brought up like the big tech companies, Mag 7. There was an interesting chart by the tech investor Mark Andreessen, the billionaire tech investor who gives a lot of policy advice to the Trump administration. He was basically showing that the majority of the major stock market indexes what the Nasdaq 100, the S&P 500, the majority of it is the Mag 7, right? The S&P 493 is not doing that well.
Yeah, well, and speaking of Peter Thiel was right in that administration, but yeah, breadth has improved a little bit. We did have a little, obviously, in the spring, we had a nice breadth thrust, but yeah, I mean, Nvidia is now the largest company in the world, even larger than Apple, over $4.2 trillion market cap as of today. Microsoft 3.8, Apple 3.2, then Amazon at just about 2.5 trillion. And I mean, like those companies together. I mean, was it like almost 50% of the Nasdaq 100? It's like 20 to 25% of the S&P, and they always reweight them, but they never reweighted enough. So it is pretty amazing how they can just bid up those stocks at the top, whether that's just through options and things of that nature, and just kind of move the markets that way, just through a handful of stocks.
And they are spending big capital expenditure on data centers, artificial intelligence software upgrades. And I personally do not think that there will be a lot of successes of companies with artificial intelligence software. I think the software is creative destruction. It's had record amounts of creative destruction in a short amount of time. We could potentially see a world history, a record amount of creative destruction in the shortest amount of time in world history with artificial intelligence software, all the innovations that are coming with video software, how disruptive and innovative it will be to use different versions of the software like video editing software or graphic design. I mean, I can make YouTube memes for my thumbnails for the videos. I can make them pretty darn good ones in under 5 minutes for free. Stuff that like graphic designers would have quoted me for hundreds of dollars in the past, I could do in under 5 minutes for free now.
Right, and no workload, right? Because you don't have to email somebody, wait for them to get you just as soon as you're ready to post it, you boom, hit it, and it's right there. And speaking of investment, the Saudis, they just did that deal a month or two ago. It was right before the Iran strike. But the Saudis pledged a whole bunch of money to all the I think like that help build the data centers in Arizona and all that stuff.
Well, anyone with cheap natural gas, Aaron, will start looking at the data centers. They will want domestic computing power. You've seen
Mm,
announcements over the last month or so. Russia has announced that they're going to start to build these data centers because they have the cheap natural gas, they have nuclear power,
yep.
United Arab Emirates. So these countries are going to want their own local computing power, data center upgrades, as long as they have access to the chips. But Huawei is actually improving rapidly on competition with Nvidia. So Nvidia does have the moat now, but 5 years from now, I'm not so sure.
And they're all buying up China specifically, buying. Well, we can talk about this too. They're buying two specific metals that I've talked about plenty of times, platinum and palladium. And platinum's been on a tear, $900 an ounce in April. It's at 1450 now, and palladium from about 900 to about 1213 right now. So those were my kind of long-term like catch-up plays, and they've really started to take off. But yeah, there's a race here. And how about copper? Oh my goodness, 10% in one day on July 8th, not even a month ago.
Wasn't that the
What a
tariff?
move.
The
Yes,
was
yep.
so the July 8th, that spike that you talked about, that was President Trump announcing that he's putting a huge tariff on imported copper.
Huge tariff.
I think 50 is it
Yeah. It was
50%?
50%.
Oh my God.
And so a lot of the time, especially with copper or these commodities, you'll get these big spikes on news, and then that's the top. No, it's holding up. It just made a new high yesterday. So this isn't just a euphoric, okay, buy the rumor, sell the news. It's holding up. The price is holding up right now, and
Well, I would say the
yeah,
market believes he's going to keep the tariff in until
I,
there's more supply online then.
that's what it seems like, because usually what'll happen when you get a big spike like that, especially in a commodity, every short seller, anybody who is short, it doesn't even matter if it was a hedge or not, they get blown up. And so what'll happen is it'll come down pretty quickly. That dip might get bought, but usually it comes down just because the shorts get wiped out. And that hasn't really happened. I mean, it just kind of stalled out and went sideways for a few, like a week or two. Now it's right back up. So it looks pretty sticky. It looks sticky. That's all-time high. It's almost at $6 582 right now.
Commodities long term. I mean, I think as a contrarian, I'm always looking for which commodity companies, sectors, industries are cheap and hated. I mean, oil and natural gas to me, Aaron, are looking cheap and hated. I just saw an article about restructuring BP, how now like the new CEO, the board of directors, the activist investors, they're cutting out as much waste as possible. All the negative return on investment stuff that was ESG, wind, solar, biofuels, they want to get rid of it. And BP has a track record over the last 20, 25 years of just losing many, many billions of dollars trying to invest in that stuff. Well,
Trying to
now
do that.
there's,
Yep. Yeah, they were really big into that.
well, you can't keep losing that many billions of dollars and
Yep.
running an oil and natural gas business. You just can't. You're going to fall. You're going to barely, especially if like all the pension funds and all your like large institutional investors, they all want those dividend checks and dividend increase. It's just the math just doesn't work for capital allocation.
Right. That's the only reason some of those institutions are holding them is for the dividend.
And they don't want the dividend cut, they want the dividend raised. So you have a bunch of people fighting over policies. You cannot run an oil and natural gas business and waste many billions of dollars per year on a negative return on investment or stuff that loses either loses money or doesn't make any money. It's just that simple.
Yeah.
You
And
have capital expenditure. You have to
yep.
maintain property, plant, and equipment for all that those oil and natural gas wells, the pipelines, the refineries, and then you have to go find more oil and natural gas to replace your reserves.
Well, and again, like those data centers aren't just going to build themselves, and I don't think that we're going to do that with you know, electric, that we're not going to do that with ESG power, right? And
Well, maybe a little bit as a supplement. You can put some solar panels
sure,
on the data center. You can
sure,
put a little
yeah,
bit of, you can do a little bit of that for peak
especially in
load.
Arizona, yeah,
Yeah, you can do a little bit of
sunlight,
that, but for base load, I mean, you see big tech and they are
yeah.
scrambling to secure nuclear power. And this is something that you and me, Aaron, have been talking about. We are ahead of the
Oh yeah,
curve.
long
Oh,
time,
3 or 4 years. Yeah, we've
yeah,
been people can go back to the original episodes of This Week in Charts where I was like telling Aaron that like we have to cover uranium. I think the bottom's in from 2020,
yep,
2022. It was
yep,
Cameco was range bound.
yeah, we got that, and it's yes, I mean uranium, like some of these new school, who's Oklo, all new all-time high, SMR new all-time high today. So new scale,
Well,
the
Knocklo is not Knocklo, Oklo, right?
Oklo.
Oklo is the hot one, but I'm not sure. Do they have any revenue or cash flow right now? Because they're a new technology, right? So they're a next generation
Mhm.
nuclear power.
Well, they're getting funded, and I think that's the key.
Okay, so it's going to be a high beta, very speculative stock because it's not a stable business right now with like free cash flow and earnings and stuff like that.
I don't believe so, but they're getting a investment from feds. So
Well, I mean, Google is putting a ton of money into nuclear fusion reaction research and development. I think in Texas they're about to build a test pilot facility for the liquid fluoride molten salt thermal reactor. I think they were talking about it in Wyoming or Montana, one of those Midwestern states. They were talking about building a test facility there. TerraPower and some of the other companies are doing stuff like that for next generation. So they are doing innovation. It's just taking some time. But I think this is one of the key long-term trends. So as an investor, if you can identify the long-term trends and you can get in early and not chase these things when they go up too much, you have the potential to make a lot of money off growth, especially like earnings growth.
and another thing too is like I don't think people realize just how much power these centers use. There was a special. I don't remember what it was, but it was like something like an A&E or something like that. And it was this family, I think they're in North Carolina, and they live like a half a mile away from like one of Meta's data centers, and they can't even drink the water because it's so polluted from just living near the data center. And like that's how much power like
Is that a new
these
data
facilities
center or
use.
an older data
It's a
center?
it's it's a new one.
Oh, okay.
It like like people just act like it's just magic. Like we're just gonna be able to build these things. No, it's going to require a lot of energy.
Yeah, I agree. It could be potentially an order of magnitude. So people are like using ChatGPT on their phone or their laptop or desktop, and they think like, oh, there's no difference between a Google search and ChatGPT.
Right.
The difference, Aaron, is on the back end. It's
All those NVIDIA chips, those 50,000 chip that they have, yeah, like that's why they spent billions of dollars on this stuff. Like they didn't just pull out that money out of their pocket for nothing. They want a return there.
well, the back end is on all the data centers, so you get a rapid analysis and research.
Right.
Like for some of these like deep research programs on the software, I mean, it could almost write a research paper in a couple of minutes. That's how
Yep.
ridiculously fast some of these things are.
Yeah, that's not a Google search, right? That's not just a little cloud, thing going on.
According to some of the trolls on X, it is. So, but they would be wrong. They were telling me that like uranium had a top and no nuclear power is needed, and oh, I can use the software program on my phone the same. There's no difference.
No, I don't see anything that's saying there's a top in uranium. I've seen nothing but each time we've had pullbacks in these uranium stocks, they've been healthy. And I mean, Cameco, like you just use that as a benchmark, that went sideways for like 2 years. It's been parabolic now, but it's gone sideways from the end of 2023 up until about a month or two ago. So, I mean, is it overbought? Maybe on the daily chart, but it's they're behaving in typical bull market fashion. Up, consolidate. They're not just going parabolic. They're digesting the gains. And that tells me that institutions are still buying and that it's still healthy.
Well, you're seeing investors at the actual business level. You're seeing like private equity. You're seeing a lot of venture capitalists. They're making investments into the energy component for these data centers and the data center infrastructure. You're seeing China announce, I think, about 9 or 10. Their plan is for about 9 or 10 new nuclear power plants every couple of years they want built. The US is behind in that regard. I mean, we have an existing fleet of nuclear power plants, but a lot of them are many decades old. And I think at the recent conference a couple of weeks ago in Pennsylvania, President Trump even flew in there and he was announcing that like not only is $90 billion, I think, of investment going into Pennsylvania for infrastructure and data centers and upgrades for like nuclear power and natural gas and those types of things, but he also wants to fast track the permitting process for new nuclear power plants over the next like 5 or 6 years.
How many per year in China? 9 or 10?
Yeah, it's about nine. They build them very efficiently, so they can get them
How many
built.
safety violations per unit per year?
Oh boy, are we ever going to get the truth about that? I mean, most of this data and stuff that comes out of that the Westerners get, a lot of it's heavily spun.
Oh yeah.
So a lot of the economic data we get in China is very, very heavily spun. There is obviously Chinese social media, and you can get some insights there into their culture. There's a lot of unemployed young Chinese men and women that just graduated college with 2 or 3 degrees, and then they can't find a high-paying job right now. So that's the same thing here in the U.S. I mean, they're using ChatGPT to do their homework and write research papers, and then they're graduating college, and now they're not finding jobs.
I feel bad for kids who are programming. I mean, that was a job that was like, oh, that's a guaranteed high paying job, even up to just a year or two ago. And now all of a sudden it's like, oh, nope, that's obsolete because me personally, I've had AI like help me write scripts on TradingView just for like trading indicators. And I can do it with it like 96% accuracy in minutes. And you just need somebody to like comb over like one or two like little like hiccups and it's perfect.
There's, as I said a few minutes ago, there's going to be, I think, potentially record amounts of innovation and creative destruction
Mhm.
with the software as it gets better and cheaper in many different industries. I mean, honestly, like Aaron, I don't know if you have a Bloomberg terminal, but I have a lot of friends who have them, and everyone just complains about how expensive it is. $29,000 a year for your first one. You get it like a deal if you buy multiple machines. If you not buy, you lease them. Sorry, you lease them. So you get a
Right.
deal if you lease multiple machines. It's still like the actual Bloomberg terminal, though. It's an old piece of junk. The hardware and the software. I mean, with
It's
the
very
current.
dated.
Hmm?
It's very dated.
Well, they have like a monopoly. It's a moat. Like the whole
Right.
industry, all the bankers, hedge fund guys, almost a lot of senior executives at S&P 500 companies, they all use a Bloomberg terminal. But if there's a better and cheaper version with hardware, software, and then you integrate artificial intelligence software, and you can make something for $2,000 or less a unit, and then charge like a membership fee per year at a lot cheaper rate, that's a lot better. I mean, Bloomberg's moat's going to be heavily disrupted, I think, in a few years.
I have a terminal that a partner of mine has created, and it's absolutely amazing. And it can be done at very, like you said, very cheap relative to that anyway. I mean,
Yeah, perplexity.
it still costs me some money, but it's definitely worth it.
I think retail investors can do something really good for $2,000 or less. I mean, at scale, I know Perplexity, the artificial intelligence software company, is working on like a competitor to Bloomberg Terminal right now. They're also working on stuff that integrates with Microsoft Excel for CPAs and for cash flow modeling. It could pull the data from a lot of the securities and exchange, like the quarterly filings, the quarterly data, and the conference call transcripts. It can do stuff that people would be paying Yahoo Finance Pro, like the gold version, a lot more money for a fraction of the price. So we're already starting to see a good amount of the disruption. And we're going to see a lot of disruption though, like with video editing. So Google VEO3 was the one that's leading, and there's already startups like in the US and China that are innovating and beating it, that are taking like the open source software and they're beating it for a fraction of the price.
And like when you say beating it, I mean wrecking it. Like it's so much better, right? And it can be done, like you said, by anybody who like has a niche and like a talent. And I mean, there's going to be a saturation of things too, and it's going to really drive the price down. Like you said, it's going to, and again, this is capitalism. This is how it works, right? So, which is a good thing. Get the out with the old, in with the new. And if you can't update your product and it's too expensive, you deserve to just keep left to the wayside.
Well, I think it's going to revolutionize for productivity and costs and quality for things like animation and video games and like Hollywood movies. Stuff that used to take like the CGI, it used to cost like hundreds of millions of dollars, and it used to take a couple years of editing and CGI and hiring all these CGI houses in China and India, different houses to work on. Say to make this Marvel movie, the Fantastic Four, that's coming out soon. Coming out today or tomorrow. They're going to be able, with artificial intelligence software, I mean, they're going to be able to do that in a fraction of the time at a fraction of the price. And it's going to be 8K quality. So it's going to benefit different industries. It's just not going to benefit a lot of these software companies.
And some of them will do well, but a lot of them, yeah, like you said, will go to the website, or they'll just get bought out or something like that. The ones that are ahead of the curve will do okay.
Well, if you can apply the software earn, so if you don't have to
Right.
hire as many humans and you don't have to
Mhm.
outsource to all these companies in India that used to cost you tens of millions of dollars, in China that used to, hire a bunch of humans to work insane amounts of overtime to release this movie with a 200 million or $300 million budget. I mean, the budget cost should go down enormously when they adapt to the new software.
Yeah, absolutely. Yeah,
And
and it's
then
gonna it's gonna happen across the board.
I think a lot of industries are going to be disrupted. And then, I think one of the other major themes, and obviously, you look at charts, the company that's actually going to go IPO, I heard, is Unitree Robotics. That's the top Chinese robotics company. They're supposed to go IPO soon. But I think now with artificial intelligence software gains, that's going to be the operating system, the software for the rapidly improving hardware of these drones. And the Trump administration is loosening the regulations enormously. We just saw a video released by the Pentagon with Defense Secretary Pete Hegseth talking about making it way easier to innovate with new types of drones and reducing the regulations there. So there's more drone innovation in the United States. And we're going to see a rapid adoption by the manufacturers. So, like, I think in BMW and Mercedes-Benz factories here in the United States, they're already testing these new humanoid robots. They're not the Tesla Optimus one. I think they're another new company. Brett Hancock, I think, is the guy's CEO. I can't remember the robotic company offhand, but we're going to see a lot of innovations. So these technologies are starting to stack on each other. And a major theme here is that we have like a Cold War, a technology arms race. I call it Cold War
Hmm.
2.0. It's not an actual physical war. It's they're arming up with the new technologies. They're spending big amounts of capital, whether it's the U.S. military, the tech companies, government grants, and all these other things.
Palantir, yep,
Well, I mean, look
yep.
at the announcements that President Trump did when he went to Pennsylvania. And I think there was another, on top of the Pennsylvania conference last week or the week before, there was another conference, artificial intelligence conference here in DC like a day or two ago.
Yeah, and like you said, they're getting funding from the feds, and they're getting funding from governments. And you and I have been on top of this for a while. That there's a Cold War, and this is before anybody was even talking about it. But like this is we're in a full-fledged Cold War, like 100%. And they're not gonna. This isn't gonna. This trend of governments funding all these aggressive defense and research and tech projects is not going to go away.
Well, look at the policies that the US and China back and forth, back and forth. So China tried to put the rare earths policy, a really harsh rare earths policy on the US. And then within a couple months, the Trump administration, the Defense Department announced what strategic metals stockpiling. They hired a former senior executive from Newmont Mining in charge of it to help them with this. And then what they just made investment into the old Molycorp that came out of bankruptcy, what MP Metals, the rare earths company.
Which one was that?
Is it MP Metals? Is
Yeah,
that
yeah,
the?
MP, yeah, that's right. Yeah.
Yeah, so they don't do all of the rarest value chain that the old Molycorp did before bankruptcy. So I think they're just mining the light rare earths. They don't really, unfortunately, they don't have a lot of dysprosium. So the dyspro
They just got a deal though too.
Well, for our listeners out there, for companies, there's a Canadian company and they have like thousands of patents and intellectual property arrangements, and then also like joint venture deals with Honda and others, and they actually do the innovation. They don't do the mining. That's Neo Performance Materials. They are profitable, free cash flow, and pay dividend. So they are a Canadian company with locations in a number of different other countries. I think like 10 other countries. They actually do the innovations with rare earths, and they're not involved in the US versus China because most of their locations are in Canada or Europe or Asia.
Yeah, it was right. MP just did a deal with Apple, $500 million for rare earth magnets, and that was after the China export curbs.
That's interesting. They're doing a magnet deal because there's a bunch of steps on the in the way there in the value chain before you get to magnets. So you have to from the rare earths mining, and then there's a ton of chemicals. It's a lot of the material is radioactive because there's normally thorium or uranium byproduct mixed in with the rare earths because of their electromagnetic chemical properties. The
Yeah, well, this wasn't from the. I mean, it was just direct from Apple, so this wasn't the government. But
Yeah, I mean, it's. I'm not really sure. There has to be some. My point. Sorry, I didn't make this exactly. There has to be something in the middle there. Because there's a bunch of processes. They're making rare earths and getting them to powders and into alloys, and then the last couple steps to magnets or other products is very, very difficult and time consuming. And you're using a ton of chemicals. It's
yeah,
super highly energy intensive and toxic. And then you have to store the radioactive byproduct, so the thorium or the uranium, because the rare earths are always with a radioactive byproduct.
right. Well, I guess that's for Tim Cook to deal with.
Okay, so let's talk about let's talk about interest rates right now. So
Sure.
interest rates, you've said before we start recording that the Federal Reserve Bank doesn't have a lot of control over the yield curve, but I know for a fact that President Trump and his Treasury Secretary Scott Bessent, they want to refinance the U.S. national debt, which is growing very rapidly. They want to refinance at a lower interest rate. Do you think they're going to be able to get what they want?
No. So in one word answer, no. So Trump is no secret been bashing Powell, right? And but the
It's
thing,
like
right,
daily. Yeah, it's like
right,
every day
right.
now. He's
But
like
the
out on the
thing,
golf course. He's like out on
right,
the golf course and it's like, okay, time to
is
bash
just
Powell.
send a tweet out, yeah. But Scott Bessent is a smart guy. He worked with Soros. He's been on the bid ask. He's been in the pits before. He knows how to trade. He knows that the Federal Reserve does not dictate the 2 year yield. I mean, they do, but the 2 year yield dictates the Fed more than anything, right? And Trump should know this. Trump being, in there with like Bessent should be letting Trump know this. Any president should know this, right? It doesn't matter if you put Jerome Powell or the Tooth Fairy in there as Fed chair. Like the Fed funds has to go off of what the 2 year is doing. Right now, the 2 year yield, I mean, you could argue that you maybe could do a 25 basis point cut. That's it. They want 300 basis points of cuts. It's not happening. And if they do, we'll have, you thought inflation in 2021 was bad. It will get insane if they did something like that. Because it won't happen. So they're not going to get what they want. They're going to keep issuing at the short end of the curve. And by the way, we have 7 trillion, yes, 7 with a T trillion to roll this year alone. Thanks, Janet Yellen, for that. And it's only going to get worse because nobody wants to buy the long end debt. And so they're going to have to just keep issuing at the short end. And I don't think they're going to get what they want unless they just allow a recession to happen, which they can't do either, because that means the market's going to come down, which means their tax receipts collapse. So it's a rock and a hard place, and they're going to choose inflation.
Well, Jerome Powell should have never cut interest rates right before the November elections. What was it? 75 basis points cut.
100 basis points cuts right before the election. But now it's a big deal to cut, right? Now it's a big deal, even though Fed funds is really, I mean, it's above the 2 year. They have room to do a cut, but I just don't see them doing much more than one.
I'm not even sure he'll do that because I don't think he wants to help Trump. I mean, after the first couple months of Trump's first term, I mean, he became an ever Trumper. There's interviews that James O'Keefe got undercover, like some of his journalists there, interviewing Federal Reserve Bank people that were hired. I mean, they basically just hired tons of woke DEI, never Trump people over the last like 5 or 6 years too at the Federal Reserve Bank.
I think what they're just doing right now is they're just using this as an excuse to merge the Fed and the Treasury. Because I mean,
What will that do in your opinion?
it just consolidates that. It's doing what they're already. It's already kind of being done now. But
Does that make like QE easier or something like that, or to hide like debt monetization
yeah,
off balance sheet, or do you
yeah,
what? I don't really see that much difference then if they're going to merge the two.
yeah, you're probably right. But I think that's what they want to do anyway. I mean, they're already doing QE right now with via SLR. It's like technically speaking, it increases bank reserves. So, but I guess it just gives them more control over things. I mean, you're right. It's not like it makes that much of a difference. It's basically the same thing now anyway. But
Well,
I think that's what they want.
all the math is a mess, Aaron. And honestly, like if the Fed had to do generally accepted accounting principles mark to market, the Fed would be
Oh
insolvent.
yeah.
I mean, Rand Paul, he did an interview on Fox Business a couple days ago. The math he was talking about, the current interest rates, the Federal Reserve Bank is paying around 188 billion per year because
Mhm.
of where interest rates are out to like interest on excess reserves and some of the other programs, about 3.4 trillion of the reserves and other bank cash that was parked either at the different either at the Fed or in interest on excess reserves or overnight repo, all these other facilities. And what was shocking to me, Aaron, is Rand Paul said on the interview that around 40% of that 188 billion, so just under 80 billion per year, is going to foreign private banks. So it's paying out like an enormous amount of money to foreign banks and funding this. So it's just not only is the Fed not making a profit because the Fed used to make what $80 billion per year
Yeah.
and remit it to the Treasury. So that
And
was
remit it. Yep.
immensely profitable from all those US Treasuries and the mortgage-backed securities. And like now it's like just hemorrhaging money.
And the thing is, too, you're the only person I know who's consistently talked about this, but the SPVs, right? Back in April, a good friend of ours, Infra Robert, we did a little show on my channel, and we were talking about how this was right after like the big crash, like Liberation Day. And we said like they're going to have to step in because SOFR, like credit spread index, Bank of America credit spread index went from 2.6 to 4.6 in like not even a month. And sulfur was spiking, and we said there's something has to be done. But the Fed didn't announce a liquidity program. They didn't do anything. But how did all of a sudden those assets just get fine, right? Well, I mean, I can't prove it, but who's to say they didn't just have a bunch of stuff and stuff into SPVs that nobody knows about?
Well, there are losses there. I mean, like Porter Stansberry's on social media almost every day talking about how Bank of America has over $100 billion in losses on older U.S. Treasury bonds. We know there are massive losses on older U.S. Treasury bonds. I know for a fact, and I'm not going to name names, but there's around half a dozen bond fund managers I know, Aaron, that have blown up over the last 6 to 12 months. Like literally, they have stopped marketing their bond funds, or they closed them down, and they're marketing other funds on podcasts and on business TV and social media. You could just see
We
which
don't have to name names. Everybody knows who they are.
yeah, there's around half a dozen. Well, one of them told me in emails a couple years ago that he lost almost $1 billion for a customer money, but his stock fund that he was managing, he started marketing that instead and started bringing in massive amounts of customer funds because he was paying like a financial podcaster like many thousands of dollars a month for shows and promotion. So
Yeah,
I
and
mean the bond industry, government bonds, I think this is a clear long term, whether it's Japan, the United States, clear government bond bear market, one of the worst ones maybe ever.
And the thing is, they just don't want to give it up because it was in a bull market for 40, 50 years. So there's just this embedded by the dip in bonds, and it just hasn't worked. And they just keep hemorrhaging money.
Well, you get to
And
the math problem like Japan, right?
yeah.
Because like Japan was the widowmaker trade for 35, 40 years, but we
Hmm.
knew eventually the math just it was going to break at some point. The problem was timing. No one knew the exact timing, but here we are. It looks like finally the Japanese government bond market is finally breaking.
And they're trying really hard to juggle it, but I mean it's and then you have the dollar changing too. The dollar, having The drastic move down that it's had, that's having an impact as well. So, I mean, this is very delicate, but I mean, we're an inflation regime. This is an inflationary regime, and it's not very stable. So, this is the type of regime that we're in.
Well,
Higher volatility.
stagflate, tax lie, and the
Mhm.
Cantillon effect, and then they're doing the policies like you and Infra have said about what yield curve control or down monetization. I mean, there's a bunch of names
Mhm.
for it. They call the new labeling is what fiscal dominance.
Fiscal
I don't.
dominance. Yep. Yep.
Well, but I don't see it as any different than yield curve control, financial
Right.
repression, debt monetization. I mean, it's more or less the same thing. They're debasing the currency so they don't have to cut government that much. I
The
mean,
the
like,
the difference is the stimulus is coming from the Treasury, not the Fed. So it's not, oh, let's just add a bunch of zeros onto bank balance reserves. It's actually like, let's put actual dollars into the economy, which is by far way more inflationary than QE ever
well, the
was.
the commercial banks are not loaning into the real economy. I mean, they're
Correct.
they're they're loaning to US Treasuries, I think. And Jamie Dimon has warned that like those accounting laws, the SLR and those things, like if they try to stuff the commercial banks with say from 10% reserves of US Treasuries up to 30 or 40%, things are going to get really, really dicey.
Oh yeah. And again, even like a Keynesian like trained economist would tell you fiscal stimulus is way more effective at creating inflation than any sort of quantitative easing to any sort of monetary stimulus like Federal Reserve.
And so that this brings us to the main macro trade that you and me, Aaron, have been talking about for the last couple of years, and I don't think it's going away. If you are a non G7 central bank and you see all these policies from DC, whether it's the budget deficit, so the Trump tax cuts, which were supposed to cut government spending and Doge cuts, and then the big beautiful bill gets passed, and to pass the bill, to get the votes, to trade for the votes necessary to pass the bill, they have to stick in all this extra spending, all these military and defense upgrades, all this other junk pork that was added into the bill. And then basically, like the CBO is saying, I don't believe the CBO estimates. I think they're going to be way off. I think the budget deficits are going to blow out even more than the CBO is estimating.
When the CBO estimated Obamacare was going to save money, and it ended up costing us trillions over however many years. Like, I mean, that I've never met someone more. If there was a derivative that I could just bet on the CBO being wrong, I would be retired.
So if you are a foreign central bank and you're running a trade surplus and you have some dollars and you're accumulating foreign exchange reserves and you see these policies out of DC, whether they're 3 years ago the Russia sanctions, Trump threatening if anyone de-dollarizes are going to put on additional sanctions. You're seeing the budget deficits blow out when the Doge cuts claim that they were going to cut spending by a trillion. If I was running a central bank in another country and I saw the comments from the Polish central banker that were on Kiko, no, they were on a World Gold Council an interview, a survey from central bankers, and he actually said it publicly. He was like, look, we're going to be hedging our reserves. We already had a lot of US Treasuries. We don't think we have enough diversification. We need to hedge dollar debasement and inflation, and we're just going to start buying gold. And I think that's exactly the theme over the last 3 years, and I do not see that going away because I don't see anything, whether it's the Republicans or Democrats, whoever's in the White House or Congress, I don't see any of that stuff changing really.
Because there's zero alternative. There is no, this is the new Tina trade because either you, what are they going to do? Let it deflation? Are you kidding me?
Well, then the
Let's
tax receipts they allow
yeah.
deflation. So I look, I'm a free market guy. You can't really have capitalism without bankruptcies. But if they allow bankruptcies, then there's deflation, and then tax receipts for asset prices will
Collapse.
collapse,
Yeah, yeah.
and then the government, the federal government here in DC starts to panic. And I would argue that that was one of the main reasons the QE programs even started in the first place. Was in 2008 when there was Lehman Brothers, there was a stock market crash and home prices crashed. There was a 25 about a
Derivatives.
20
Yeah,
no, there was a not
yeah.
derivatives. There was about a 25% drop for about 6 months in the tax receipts. There was a huge panic coming out of
Well, I
DC.
was saying though that the derivatives on top of that with the banking
Oh
system
yeah,
being,
yeah.
affected,
Well,
and
the
yeah,
yeah, the system is a Ponzi scheme.
yeah, well, yeah.
Fractional reserve banking and the derivatives and the euro dollar and all the whole thing is a Ponzi.
But
There's
you know what I was saying though about gold though is like I hate to say like there's no, whenever you get into a trade, you never want to say like there is no bear case, or there is no bull case. But I can't see a bear case for gold because the only bear case I could see for gold is if in the near term too many people like get positioned long, then you could have a correction. But either interest rates go up, which creates more instability, right? And so you buy gold, right, to hedge against instability, or they come down and that prices in monetary stimulus from the Fed, which you buy gold, right? So I don't. It's kind of a win-win. The
Well,
only
I,
thing I
I
could
see the
see it coming
macro
down.
factor. I see the macro factors like you. I see them very, very bullish. I see huge tailwinds. I mean, but what governments have done historically, though, is they try to confiscate the gold. They potentially, if they're really stupid, like the government of Mali, they could try to confiscate the mine like they did with Barrick Gold and say they're going to run the whole mine themselves. They could try to do something like this. You're going to find out, though, a couple years from now that these governments are not able to run the mine.
Yeah, no, it'll the mine will collapse.
Well, they're going to come begging. They're going to
Yeah.
come begging a mining company a couple years from now to fix things after they've run the mine into the ground, probably.
Yep. No, 100%.
So, normally that's what happens, in a banana republic or an emerging market country. Like they try to put in capital controls or ridiculous, what's a windfall profits taxes.
Hmm.
That's what I was seeing out.
Oh
Some
wait.
type
Oh,
of
how about we tax unrealized capital gains?
Bernie Sanders. Bernie
They had,
Sanders would love that, but
yeah,
then like
Yellen wanted to do it, I think.
and Elizabeth
Yeah.
Warren, yeah, all
Yeah.
people who are worth tens of millions or hundreds of millions of dollars. Yeah.
There is no way that we don't even need to get on that tangent because that'd be a whole show there.
Yeah, we could do a comedy hour for that one,
Yeah, yeah,
about like Elizabeth Warren and Bernie
yeah.
Sanders and AOC,
Mhm.
how they're like the worst champagne socialist hypocrites
Oh,
imaginable.
yeah,
Yeah, he's going to climate change conferences on private jets.
yeah. And then they get off a mile before the a block away, and then they get on their bike and then ride their bike to the.
Well, they need a photo op with the
Mhm.
journalist to make it look like they didn't use any fossil fuels. Come on, man.
Right.
Okay. As we wrap up here, I want to get your thoughts on for the remainder of 2025. So second half of the year, maybe the next 6 to 12 months. What sectors or industries do you think will outperform the general stock market indexes?
Well, one of my calls last year was cloud. I think a lot of that's priced in now. I do think healthcare can do okay in some rotation here towards the end of the year. I think we'll see. Right now, I am seeing a little evidence. I know it doesn't look like it, but there's a little evidence of some profit taking in chips and in tech. And typically, what happens when when money comes out of there, if you get some sort of a digestion phase in the market, which I think is close. Um, we've melted up quite a bit here. I do think those defensives can do okay. I think healthcare, and I know it's the most hated area, but energy usually is a beneficiary when tech does underperform. When last time we talked, by the way, I did say energy would be a good buy into the beginning of the year, and XLE went up, about 15% or so in that first month there until Liberation Day. But I do think that you could see a little bit of rotation into quarter three. Um, that's kind of really where I'm at right now. I'm not looking. I mean, right now we're up 32% in equity markets right now since April. I'm trying to be a little bit more like guarded and like kind of cash conscious as I'm just kind of taking profits out of this market, and we'll look to reinvest a little bit more if we can get a correction. But I do think healthcare can see some rotation. I think that's a sector that's really beaten down. United Health has had a
So
terrible first half of the year. Um, but I do think that their valuation is actually ridiculous at this point.
I would like to see more innovation in the healthcare industry with artificial intelligence software, new drug discoveries. I mean, it's big and bloated with the
Yeah.
corruption at the FDA and the government regulatory agencies. It's just a mess right now with the healthcare industry with the costs. I mean, private equity is involved in they're raising the prices at the doctor's office for specialists. They're buying up these medical groups, these veterinary clinics, and all they do is just raise the price. It's not real capitalism there. They've taken advantage of all the legal loopholes with lobbying and buying off the politicians. But in terms of industries, I mean, you brought up oil and natural gas. I think the industry is consolidating. So I think there's a restructuring. We're seeing this with BP right now. They announced publicly a restructuring with BP. I mean, they could get bought out. There's at least three large companies, whether that's Shell, Royal Dutch Shell, or Chevron or ExxonMobil. They're all looking potentially at buying BP because they've lagged so much. They do have some good assets in oil, natural gas. They've been mismanaged for so long that stock has lagged. So I think the industry for oil and natural gas, we're not going to see huge growth, but we are going to see efficiencies improving, consolidation, restructuring of companies. If you are a low cost producer, say like a Saudi Aramco, a Chevron, an ExxonMobil, and EOG Resources in the Permian Basin, there are opportunities there for you to go buy assets on the cheap. And I think like long-term bull market for liquefied natural gas exports, pipelines to the data centers, I think those are long-term, good long-term bets, especially if you buy those at the right price. But Aaron, we have to go back to the gold miners here. I mean, as long as the gold price is going to stay at these levels and the energy prices are going to be range bound, unless the gold miner has a mine confiscated like Barrick Gold and Mali, say like it's only a one or two asset producer, or the mine doesn't come in on time and on budget, the miner's building a new mine, these miners should be minting money right now. And they should be having enough free cash flow to where they can announce dividend increases. If the stock is lagging, they can do share buybacks. They can invest in property, plant, equipment, and upgrade the mill. Or the one I think we're going to start to see now, we're going to start to see, as long as metal prices do not crash, we will see aggressive mergers and acquisitions the next 6 to 12 months.
Yeah, and I mean, even if the price of gold goes into, some consolidation, as long as it just holds. I mean, right now it's been in a holding pattern for like 2, 3 months, but it hasn't gone down. As long as it just holds the gains, right? That's more than enough to solidify that this is a new regime here. And yeah, it is quite baffling how the miners have taken so long to catch up. I think it's just coming down to, does Wall Street start like underperforming their benchmarks, or do they have to start picking these up? And
Well, I think the miners are going to start making acquisitions. So, like, look at
right,
Sandstorm Gold. I mean,
yeah, Royal
Sandstorm
Gold,
Gold,
yep.
Sandstorm Gold for their the valuation of the business, the growth pipeline. I mean, Royal Gold got really high quality growth assets that are going to be coming online. The assets are under construction. They got them at an enormous discount, and the combined company a couple of years from now is going to be an absolute monster if the deal goes through. So they just, one of the issues I had with Royal Gold when I was looking at the company over the years, they did have dividend growth. They just did not have that much growth in the pipeline. They did a good deal a couple of years ago for one growth asset with the Great Bear royalty for 150 million cash, but they, other than that, they really didn't have a lot of growth. They just solved that problem here with the Sandstorm Gold acquisition. The combined company has an enormous amount of growth on some of the best copper mines, gold or silver byproduct streams that are going to be coming online. A lot of them are already under construction. And those were not priced into the Sandstorm Gold stock before the buyout offer. So, like, people were complaining about Sandstorm Gold. I mean, he bought really good assets that were going to make a lot of money. They weren't priced into the stock, fair or unfair. And Royal Gold realized this, and that's why the buyout offer came in when it did.
Is that fully officially accepted at this point? Because the stock has traded a little bit. It has been mostly sideways, but usually when a buyout happens, the stock almost completely stops trading. It has traded a little bit though.
Well, we'll see. We'll see. I mean, they're talking about the deal going through by the end of the year. The retail investors I've heard, they are all voting against it. But normally, the way these things work is the larger company has already gone to the largest institutional investors and the pension funds, and tried to make sure that they have enough votes to get the acquisition through. So, I mean, we could see maybe a competing bid. I mean, honestly, I'm surprised Franco-Nevada didn't try to buy the Sandstorm Gold over the years. Now, Franco-Nevada should be looking at scrambling and potentially making a bid for a Cisco Gold royalty, because they could use additional diversification in Canada and the US and additional growth too to their pipeline. They also have a high valuation, and they don't have a lot of good near diversification in their growth pipeline. So Royal Gold looks like they solved that problem. They had a high valuation, not enough diversification and growth. And we'll see what the other companies decide to do. I own Wheaton Precious Metals for many years, and now it looks like I'm going to end up. I'm not planning on selling my shares, but Sandstorm Gold shares. The combined company for Royal Gold on paper, it has very little flaws.
And like you said, like yeah, so this type of aggressive move does force other peers to make other moves like that. So there's your M&A.
Well, they're gonna have to, because the future mines, I mean, there's gonna be a lot more capital required to bring some of these copper mines online, and there's gonna be a lot, as Rick Roll said in my interviews over the last couple of years, there's gonna be a lot of gold or silver byproduct streaming deals available on these copper mines. So in order to get the mine funded, they're gonna the copper miner, the base metal miner, is gonna have to sell as part of the financing package in a combination of debt, equity, and streaming. They're gonna have to sell a stream to one of these larger companies like a Franco Nevada, Wheaton Precious Metals, or Royal Gold. So there's going to be growth because I've heard people say that like, oh, Franco Nevada, the valuation's high. There's no growth opportunities. If you talk to Rick Roll, if you talk to me, I completely disagree. I think there's going to be a lot of growth opportunities for these larger companies because any potential new mine, you're looking at billions of dollars to build a mine.
Yeah, especially now with the costs that and interest rates being as high as they are too.
Okay, so I was gonna bring up data center exposure because again, we're into like natural gas, the power component of artificial intelligence software and the next generation data centers. So natural gas and uranium are kind of must-haves, I would say, long term for investors for exposure for to have artificial intelligence exposure in data center plays. Are there any other ways that you would look at, say, for like drones or data center plays? Because it looks like with this technology, the big tech companies and some of the other smaller innovative ones, we're going through an absolutely huge capex cycle for these technology innovations. So, like data centers, artificial intelligence software, quantum computing, humanoid robots, and drones. That there's going to be a lot of money spent. And as an investor, if they're spending that type of money, there's going to be a lot of growth opportunities.
Yeah, there's certainly the thing is there's definitely a few ETFs you can get exposure, but for me right now, a lot of them have already gone pretty much parabolic in the last 3, 4 months. ITA is one. A lot of these are kind of defense related. ITA defense ETF. There's even like Kathy Wood has one, RQ, and it's like a biotech and robot, not biotech, tech and robotics ETF. Um, I see the idea there, but I think for me, if I was looking for value long term, I think they've really kind of I would have to wait for some sort of correction. And I think maybe your chance to buy that would have been in early April, but they have done really well. They're up big, and it's clearly a sector that's is going to be part of what we're seeing in the future now.
Now back to gold miners for a second. Newmont Mining just announced earnings a couple hours ago after the bell. And despite a lower amount of copper and gold production, they reported a record amount of free cash flow, 1.7 billion for the
And
quarter.
it looks like the stock's up about $3 after hours too.
Yes, so this is good overall for the industry. This means that even though they
That's
didn't
very
hit
good.
their production guidance for ounces of gold produced in copper, that they still did a good job with profit margins and free cash flow. So not having any downside surprises here where they missed badly or anything like that. Because as you know, Aaron, covering a lot of these gold and silver companies in the past, there were always downside
Hedging,
surprises where
hedging issues.
well, also where we look and we'd expect, okay, there was a rally in metals prices, and then the companies would announce earnings, and the profit margins and the free cash flow were not what we expected. Well, it looks like finally the gold miners are not having any issues with rapidly rising input costs, and they're actually keeping their profit margins pretty much intact. So that's overall good for the industry, and we're just going to see, I think, more of the benefits of free cash flow growth for a lot of these gold and silver miners.
Yeah, that's a new what 3-year high for Newmont now. So that's a nice move. And yeah, the other like big problem that I always seem to come up was the hedging. Like they would screw up the futures hedging, whether it's energy prices or whatever, and they would always lose money on that. But I mean, yeah, at these gold prices, there's kind of no excuse here.
Well, there are still some laggards in the gold miners, the copper miners, but those are companies with like individual mining problems. So if it's a junior that's building a mine and there's issues raising capital and the mine's not coming in on time and on budget, or you have like a situation with SSR where like they haven't built Hod Maden yet in Turkey. It's under construction right now. That mine's not done. And then their other major mine, the copper and gold mine in Turkey called Chopler, that hasn't gotten the restart permits yet. So that one is lagging. I mean, I could see companies with production issues that have good assets that
Sure.
can be turned around, like SSR and Ivanhoe. I think they're going to get bought if the metals prices stay at these levels because a larger company that's doing well is going to run the numbers and say like 2 or 3 years from now, if we turn around the mine, we're going to mint money.
Right, exactly. And that's the mining business. It's the toughest, by far the toughest business there is. You can have a soaring prices of your underlying and you have these I mean, it's mining. There's so many problems, so many things that can go wrong.
Well, especially a lot of the problems, not just operational, Aaron, at the mine and mill with grades or costs or labor strikes. You can also have issues with the government and the bureaucrats.
Geopolitical, yeah,
Well,
yeah,
you have issues.
yeah,
Look at Mexico talking about potentially banning open permit mines or making it
yeah,
almost impossible to get a new permit for a new open pit mine in Mexico. So you get these types of, but these things overall for our listeners out there who aren't familiar with commodities mining, I mean, these will restrict supply though. So actually, like if you have a producing mine that's already in another country in a safer jurisdiction in Canada or the US or Australia, and Mexico issues, bans for these open pit mines, that's going to be less copper, gold, and silver supply coming online.
yeah. Or you have a president who's just going to put tariffs on everything.
Yeah, I mean, they're talking what China was moving to get around Trump's first set of tariffs. They were moving goods like, did you see they were putting packages? They were shipping stuff to Vietnam, and they're repackaging the Chinese goods, and so like now they put even more stuff on Vietnam to try to block the. It's just getting
Yeah.
like a ridiculous cat and mouse game.
Yeah, I think I can't remember who it was, but somebody was like, "Yeah, this is just going to be when it's all said and done, it's just going to be the most complicated way to get to a 10% consumption tax."
And that's because what half the United States doesn't pay taxes, right? So,
The half of the United States pays 97% of the taxes. Yeah,
oh, you said what
yeah.
the top 20% you said of
No,
income earners pay how much of the taxes?
oh, the top 20. No, I'm saying the like half of the country pays for almost 100% of the taxes. So about half the country doesn't pay taxes, like you said.
And you have record wealth disparity because of
Yeah.
what almost 20 years, over 15 years of relatively lower interest rates and the policies that were coming out of DC from Congress and the Federal Reserve Bank and the Treasury were pro asset price inflation, and that's created record wealth disparity.
And they didn't let the market correct fully in '08. So anybody who was a millennial got priced out of the housing market, got priced out of any sort of asset market. And then they wonder why there's all this social angst and why there's all this populism right now.
Well, unless you bought Bitcoin like years ago.
Yeah, but how many people did that and then just held it? And how many people had the money to buy it though? That's the thing too. Like we see, all the you were talking about the other day, like all the gambling and stuff that's going on. It's like I don't blame if you're 23 years old, or you're 20, even 28, 29. The government has created such a disparity that like what does it matter if you have $500 to your name? I mean, I kind of like don't blame you for gambling it because that $500 isn't going to move the needle. Like you're not going to put that into a pension or a 401k. You know, I mean, I'm not saying it's like good, and in fact, I'm saying it's bad. But I'm saying it's not like that person's fault that they're in that situation. Like, I would put it into some altcoin that might triple X, or it might go to zero. But what does it matter if you lose $500? And that's the environment that this government has like fostered and created.
Yeah, if you have $500 to your name, you need to fix your income first, your monthly income, and try to find like a
But
higher
they've made
paying
it. But they've
job.
made that. But then they've said, oh, go to school, learn how to be a programmer, and now you can't get a job because AI is taking it all over.
Yep, or go to Wall Street and be a programmer, be a quant.
Yeah,
Yeah, and now
yeah,
you're
yeah,
replaced by artificial intelligence
yeah,
software.
yeah,
So the guys who were programming the quant trading programs over the last 10 or 15 years, they're going to be automated out too.
yep. There's going to be a lot of change. I think the one thing that people should take away though is people had the same concerns about the internet in '99, and people we find a way. Life will find a way. There, AI will not eat the world alive, but it'll eat alive people who don't adapt, and that's the big thing to remember.
Well, I think in the short term, yeah, it's going to be very painful and a rough
Mhm.
adaptation. It depends on your career. So some people are going to have worse, like you mentioned, computer programmers. So computer programmers, paralegals, because once the artificial intelligence software is allowed to go into those legal databases, and they're hiring programmers now to go into those legal databases with all the old court cases. Like when I was in law school, we weren't actually allowed. When I was doing legal research class in law school, they actually banned us from using the legal research websites to look up all the cases. They wanted us to go into the books by stacks. But the literally so work that used to take hours a day for weeks for a paralegal, if not more, to go and look up cases in artificial intelligence software, Aaron, with the right search prompt. I mean, it could do it in a couple of minutes and maybe write a research report now.
I thought you went to business school.
Both.
Oh.
I dropped out of law school. I was in law school
Okay,
and
okay, all right, there we go. Yeah.
I was in law school for a short amount of time. I really didn't like it. Actually, like almost all my law school classmates are not practicing law anymore. Most of them
Wow.
are not practicing law to earn their income. Most of them are divorced, and many are very, very unhappy. If you look at their Facebook pictures, they do not look like they're in good shape, and they do not look happy at all. They're not even smiling
You've
in their
seen those,
photos.
those memes where it's like, it's me going to jail for a parking ticket when ChatGPT was my lawyer and like gets me, it gets me thrown in life in prison for a parking ticket.
Well, there was too many lawyers for supply and demand like almost 20 years ago. So there's just honestly there's too many lawyers, and now there's with the artificial intelligence software, the research it can do, it's not going to be need for a lot of legal research. I mean, the software is going to do a lot of the legal research. You're not going to need as many human beings anymore.
Right. It's that you just need that like little oversight to make sure that everything's on the up and up.
Well, the owners of the law firm are the trial lawyers that charge $500 an hour or more, the partners, the owners of the law firm. Their overhead
Mm,
just got cut. I mean, they could
right.
potentially cut their expenses enormously. And this is what the point that we were making earlier with the other industries, whether it's Hollywood's,
Software and all
yeah,
that. Yeah.
Hollywood, they're going to take the innovations in the software for the artificial intelligence video software and the accounting software and the financial modeling software that integrates with Excel or a better and cheaper Bloomberg terminal. It's not going to be the companies that do the innovation with the software. It's going to be the companies in the other industries that can reduce their employee overhead and become more productive and don't need as much expenses.
Yeah, it's definitely, and it's going to be interesting. You just got to find something that you have an edge with, and just go with that. I mean, Warren Buffett said, invest in what you know, and you can find those companies. Just trust yourself. I knew about, just to use like a example from like a year or two ago, I talked about specifically Netflix, and I said Netflix is going to go way higher because I know what is going to happen with WWE and the NFL with their deal, and I just know those markets, and the stock
Well,
is basically tripled since then, and a lot of people have been trying to short it, and it has not worked.
Well, Netflix
And
is automating too. Did you see? I think Netflix
mhm,
just released their
yeah,
first artificial intelligence software generated show, or it's coming out soon. So they're even using it too. They're going to try to cut some of their costs that way too.
yeah, and again, just find something that you think can be has value and that you understand, and you'd be surprised more often than not it will work.
But I think a trend that's starting is robotics. So like I said, Unitree Robotics, which is a Chinese robot company that's manufacturing a lot of humanoid robots for factories. They're about to go IPO. That they started filing some of the prospectus, and then there was a spin-off from the European manufacturer ABB, which I think is
Mm.
is in Switzerland. They just spun off the robotics unit, so that's going to be a separate play going forward. So I think we're looking at a long-term bull market. Not only the artificial intelligence software is going to be integrated into the robots, so the components for the robots, the materials. This is the worst the humanoid robots are going to get for manufacturing and some of the other things that they're going to be doing, working at factories and some of the other stuff. So we're going to see long-term bull markets like in drones and robots, and the artificial intelligence software is going to play a large part in that too.
And one of the things that I think people forget is that there was a criticism of like, oh, like Trump wants, you're not going to be able to work your restaurant job. You're not going to be able to work your white collar job anymore because, you're going to have to go work the factories. No, no, no. Their plan is you can keep your restaurant job. They're going to have robots build the stuff here. That's what their plan. That's what they want to. That's what the idea of the deglobalization. That's where it's coming from.
Okay,
They
so
think
you're
that they're going to
saying
build everything domestically, and it's robots building it, not humans.
okay. But the investment still comes back to the US. What
Oh
you're
yeah,
saying
for
though is
sure.
there's going to be less human jobs at a factory. So if let's say
Yes.
that there's talks now of moving all of Taiwan semiconductor facilities. So they have one facility in Arizona, but there's talks that SoftBank and the US government want to help facilitate Taiwan Semiconductor moving all of their facilities to Arizona. You're saying that those factories then there wouldn't be as many humans at each one. Most of it would be humanoid robots.
And they wouldn't have to like pull, oh, because of tariffs, like, oh, the restaurant industry is going to collapse. Like, no, no, the restaurant industry will still have people to work in it. And the idea is that we're going to build these factories and people don't need to work at them. So it's a huge investment, but if it works, the payoff would be tremendous.
Well, also the U.S. government will still get the investment and the
Exactly.
tax receipts. It would be
Exactly.
just less human. So maybe there would be like managers there of the robots
Of course.
or
Yeah.
repair and maintenance, like a software, someone in charge of maintaining the software, someone in charge of maintaining the hardware of the robots. There just won't be as many humans. I mean, like I don't know if you saw, but like there's already one robot burger chain in California. It's a small business. It's called Burger Bots. So there's only like a couple humans at the restaurant, and the majority of the restaurant are like those giant ABB robots that cook your French fries exactly how you want to, and they don't mess up your order for your hamburger.
Yeah. And again, like that's that's just a small burger joint. So imagine what companies with billions of dollars that are getting billions of dollars from the government can do.
Well, I think this is the tech cycle, like we said, and it's part of the Cold War, the technology arms race with China, Cold War 2.0. And then you have all the investment from the big tech companies in the US and the militaries in the US and China investing into all these five or six key technologies. And so the capital is going to be spent. And as an investor, you want to try to align yourselves with the capital being spent because potentially that's what's going to create a long-term bull market and profits.
And that's the other thing too about treasury yields and government spending. Like they can't stop spending because they have to invest in this stuff. And that has another tailwind for yields.
Well, I mean, we don't get to vote for them not to spend the stuff. They're going to choose to spend. They're
Right.
going to probably devalue, like they're going to devalue the dollar and they're going to spend the stuff.
They might have to at some point it might come to a revaluation of the dollar and the yuan versus gold, but that's a whole nother story.
So basically, then you've just outlined that it's a question of when and not if gold goes to 4,000 then.
I made a weird, I wouldn't say weird, but I floated an idea. It wasn't a call, but back in April, I said there's a chance that gold could go to 4,000 by quarter three. And it got to 35.40. It got pretty close. So, I mean, I think honestly, there's a lot of, there's grifting and stuff like that. But the people who were saying for 10 years, oh, it's gonna go to 3K. I was like, that is way too conservative. It is based for 15 years. It didn't base for 15 years to just stop at 3,000. And I think it's going a lot higher over time, a lot higher.
Yeah,
Just look at him too.
you've listened to my interviews with Jordan Roy Byrne from the Daily
Hmm.
Gold. He's a certified market technician, so he's been doing this a long time. I mean, 2 or 3 years ago, when gold was barely over 2,000, he's like $3,500 gold in a couple years. He was adamant about this, and
Hmm.
I was like, I would be happy if gold just stayed above 2,000 for a little bit, and then we just blew right past it. A little over 12 months ago.
Yeah, once it breaks out, I mean, it put in a base for 15 years. So once it breaks that base, it's not going to just stop after a month. And this goes for any asset. You base long enough, and once you break that base, it's not just going to stop after a month. It's going to keep going. It's going to break the base proportionate, and it's going to run proportionate to what that base looks like.
Well, also, I think here as a contrarian, Aaron, and we've talked about this with a rally, I think this is what oil's doing right now. So oil's in a trading range. Everyone hates it. We're gonna see a bottom. We're gonna see
I'm
a
long
bottom,
oil and I
probably.
still hate it.
Huh? Huh?
I said I'm long some oil stocks and I still hate it. It's
Well,
like, it's like
the point I'm trying to make though is there's not a lot of investment right now going into finding new oil. So there's a few new discoveries in Guyana and some of the other places, but not nearly enough to replace a lot of the replacement production. And I mean, we could see, I don't know if it's by the end of this year or early next year, we could see a spike in oil again because the industry is just consolidating. And when you do these mergers, large mergers and acquisitions, they don't really focus on growing oil production, they actually start cutting the costs and cutting the capex. So we're starting to see that now where the price is in a trading range and they're actually focusing on becoming more productive and cutting costs right now. And you're just not going to see a lot of investment into adding new oil production in the near future.
And the other thing too is since it was obviously way undervalued in April, but ever since the scare with Israel and Iran, like we had that big reversal, but prices held up. It hasn't gone lower. It's been accepting that range. So like the oil market is accepting this higher price here, and I think it is finally pricing in a little bit at least geopolitical risk. So we're not seeing that short seller control that we had in the first half of the year.
And that's really the major talking point here, where why they're saying the inflation is low is because of the oil price. I mean, like in reality here, if you're a small business owner with some of the tariffs, trying to deal with like the navigation here with importing foreign goods and the tariffs and things like that, the stagflation and the shrinkflation for your everyday bills. I mean, like my Target bill, my Walmart bill, my Amazon bill, they're all up a lot. They're up a lot compared to what the consumer price index is saying.
And a lot of these importers are eating the tariffs now too. So there's that as well. Yeah, I mean they act as if it's all make believe, right? The same thing like stagflate, text lie, CPI, GDP. They're always finding a way to tell you that things are better than they are.
Well, out of Washington, D.C., the average listener here is new to all this. You should not believe a lot of the people in Washington, D.C., either political party. There's sometimes limited hangouts with partial truths. The majority of the time, it is lies and spin, whether it's government economic data or a lot of the other stuff that's being said in public at the press conferences or on the business channels.
Yeah.
Or cable news, and I'm using air quotes here.
Or waste, fraud, and corruption, as you've called it.
Well, I mean, the Doge. So I think what Doge has done, exposing the fraud, I've known about it for years, and I've interviewed, people about it, like Jack Abramoff, who is a former top lobbyist, and I spoke to him on the phone for 2 hours years ago, and he straight up told me, like, look, all these other lobbyists, Republican and Democrat, all the other top ones, they're all doing the same thing I was. He was one of the only ones that went to prison, and then Paul Manafort. Those are the and Rogers. I think Roger Stone they went after. So they only really went after the top Republican lobbyists, either put them in jail. The top Democrat lobbyists that were doing the exact same thing, no criminal charges.
That's pretty much consistent with every sort of case like that. Bernie Madoff, same thing. Like, they made him out to be like this mastermind, but I mean, like, it's not like he was the only one doing that.
Well, I interviewed his lawyer, who was also a Madoff victim, and she said listeners can go into the archives. That's Helen Davis Chapman in the archives of this YouTube channel. Go listen to the archived interview from, I think, like 2014 or 15. It's a long time ago. And she straight up said that Madoff, she spoke to Madoff on the phone, and Madoff said that JP Morgan bankers knew what he was doing when the Ponzi scheme started the entire time, that because he had billions of dollars in his bank accounts, they didn't fucking care. Oh, sorry, I dropped the F-bomb there.
Yeah.
It's the end of the show here.
So yeah, we're at the end. We're all good.
Yeah, we're at the end here. I mean, like, look, Doge exposed all this fraud, but I think only 4 people have been charged. There was only a trial for 4 people. 4 government employees stole over $500 million over the last 15 or 20 years. So there's like, I could tell you there's a lot more than that. There's a lot more government. They need to build new prisons. The Alligator Alcatraz couldn't fit them all for all the financial crimes and white collar crimes that have been going on here.
And they still stuffed, all sorts of pork into the big beautiful bill and all these other. I mean,
that's the only way to get someone done. That's the only way to get any votes, Aaron. Aaron, they sell their votes. I mean, like, does anyone, only like a really corrupt or naive person actually believes that AOC's net worth is under 40,000 with their stock portfolio?
I think like, there's some people who believe it.
I don't want to be hanging out with them.
No, unfortunately.
They're at the Democrat charity event spending their trust fund.
That's right. Yeah, in Aspen.
Yeah, I could just tell you that like almost no. There's like insider trade from the Trump administration people. What Marjorie Taylor Greene was trading, she was copying Pelosi trading on Palantir, on inside information, other defense stocks. I mean, it's just
You know what,
blatant.
though? At least when Trump does it, he tells everybody, this is now a great time to buy stocks. And then immediately, at least he let the whole country in on it. At least he's the first president to let the whole country in on inside information.
Oh, with his crypto stuff?
When he walked back on the tariffs in April.
There was insider trading on a lot of that stuff too, with the currency moves.
Oh
There was
yeah,
people that had that information ahead of time, and
yeah,
which companies would be exempt from tariffs. There was people that had that
yep,
inside. The
yep.
behavior from the District of Criminals, Aaron, here in Washington D.C., which is what I call it out of Congress here, is absolutely insane. The financial crimes and white collar crimes that they get away with. For our listeners, since we have I have a little bit of a platform here, go and watch the documentary on HBO that was just released in the last couple of months, Dark Money. If you want to see how both political parties, the lobbyists, the special interest groups, politicians, bureaucrats get away with a lot of this stuff. It's insane. There was FBI agents there talking about shell companies and these nonprofit 501c3s, and there were FBI agents that had warrants and resources, and they said they just got lucky because there was a lobbyist that was having a conversation with an informant, like a FBI informant that had a wire on, and he talked about the shell company that was in another state in another person's name, and otherwise they would have never been able to track it down. They said they can't track most of these shell companies down and all the money moving back and forth from these different accounts. And that's how Hunter Biden and Joe Biden got away with a lot of the stuff. But pretty much it's happening. Almost everyone in Congress that's getting rich quick or getting richer, they're all doing it.
When Hunter Biden did that, he did that recent interview. It was I don't know if he's trying to make himself look like he's trying to get sympathy or what, but yeah, that was interesting.
Oh,
I don't know if you
that
saw
dude
it.
is a pathological liar.
Yeah.
I think the only reason he got caught by the IRS is he had so many shell companies that he mixed up the accounts, that he couldn't remember all the different shell companies correctly along with his alcohol and drug abuse. But he had so many of these nonprofit shell companies moving money back and forth that he couldn't remember all the different accounts correctly. And then he got tripped up and messed up the accounts.
That's a real white collar problem right there.
Well, there was a brief congressional investigation into Joe Biden with the big guy, getting his 10% on every deal. And they said that Joe Biden had over 30 different shell companies, and the funds were moved through over 30 different shell companies back and forth that were in different states and not even in his own name before they ended up back in his own bank accounts.
Yep.
And I could tell it's not just him. I mean, he was in Congress a very, very long time. There's a lot of people in Congress getting away with it, both political parties. So there was the people who say it's one party or the other, both political parties understand the game, unfortunately, and that's why you have all this corruption here with the big beautiful bill. Their votes are up for sale.
And pretty much every other bill too.
And this is why there's no actual spending cuts. No one in Congress actually really wants to cut spending.
And I don't think they realistically can either.
Well, my view, Aaron, the system post 2008 with the derivatives market and the banking system and the bailouts with the European Union and the European banks, the system went full Ponzi scheme. That was the only way to make it look like there was a recovery over the last 15 or 20 years. With quantitative easing and zero interest rate policy, the system went to a full Ponzi scheme to buy another 15 to 20 years.
Well, yeah, and it was the only way to not let all asset prices collapse.
Yep, and now here we are with record wealth disparity and more stagflate tax lie, and the math just doesn't work for the U.S. federal government finances with interest payments on the debt and the budget deficits. I mean, the dollar is going to take the brunt of it with a devalued dollar, in my opinion.
And real wages, versus GDP.
Welcome to dystopia, and then a lot of there's all this technology disruption there with artificial intelligence software, humanoid robots coming too. So it's a mess of macro cross currents because the new technologies would normally be deflationary.
Yeah, and that's the thing. That's the big argument is that, oh well, this is all going to be deflationary and all this stuff. But it's like, even if it is, and it is, but there's so much spending that's offsetting that it doesn't even matter.
Yep. I mean, they're investing in what all this infrastructure and military upgrades and whatever else is snuck into the. I mean, there was $80 billion that was wasted or stolen from the Department of Transportation and DEI programs before Trump took office. That was I just saw that reported in the last code. That was shocking.
It's 80 billion anymore anyway.
80 billion is a lot of six-figure jobs around here, man.
Yeah.
Okay.
These numbers, they get these, it's like they're meaningless at a certain point though. It's like I'm desensitized to them.
Oh, you mean because like we're on to trillions now, so
Yeah,
billions
yeah,
don't.
yeah. It's like, oh, what is that? What's that?
Yeah, it's $1 trillion in interest payments.
Right.
I mean, like for 15 years, no matter how much money DC spent, because the Fed kept interest rates artificially low, and the narrative was there was no inflation. The interest payments on the rapidly growing national debt were only about $300 billion a year, no matter what.
And there will never be a geopolitical situation that, destabilizes interest rates.
Well, if there were free markets, a lot of other crazy stuff would happen, but I just see less and less free markets here. And now you're talking about like the technology people that with artificial intelligence software and the robots, they want universal basic income. I don't know. The whole thing is just like there's a lot of people that want socialism and MMT. So it's just very frustrating hearing a lot of the policy suggestions out in public there.
If we had free markets, all this would have been over with a long time ago.
Yeah, there's so few of them left. There's only in a few things here or there. Well, thank
Yeah.
you so much for your time today, Aaron. I think we covered an enormous amount. So I think there's a lot of macro cross currents here with the technology investments and those things which are potentially somewhat deflationary. Although some people in certain industries will be more ripe for losing their jobs, but then you have the government spending, the debt monetization, yield curve control, which I think is all a very, very inflationary with currency debasement. And it's not just the US. I mean, look at all these other countries that are having like a government bond bear market and currency issues.
Yeah, and again, yeah, this is the regime that we're in, and I don't see it going away anytime soon.